Good morning and welcome, Patriot Radio News Hour. Joe and Jason, happy Thursday. Yeah. You know what I love about Thursday? The next day is Friday. That's what I really love. Our toll-free number, 800-951-0592. The website at allamericangold.com. Of course, we physically deliver you wealth insurance in the form of gold and silver. If you haven't called us yet, maybe you've been listening a long time. Maybe you think you missed something. I'm telling you, the big move hasn't even come yet. This is going to be, right now, I consider this to be a buy the dip moment, at least for, I don't know, the next couple of days, because that's maybe all it is before we start talking about new all-time record highs. But before we get into today, we got a lot to talk about. We had another very poor auction yesterday. Japan, are they having a Silicon Valley moment and as their debt issues continue to cause all kinds of problems in the marketplace? Are we seeing the first blow up in private credit debt? Blue Owl, very big in the space, blocking all redemptions this morning, and another bad print on pending home sales. And then Walmart said, hey, earnings were pretty good over Christmas, but yeah, no, things are getting tough, and we have to raise prices. So we've got a lot to go over today. But before we get into all of that very quickly, a quick update with Texit Coin and Iskander. Iskander will go live at 6 p.m. Central. But for right now, no U.S. participation in Iskander. I have a call in about an hour with Bobby. We'll get some more details, and maybe tomorrow I'll have some other news to share. But if you missed yesterday's show, some very good news for Texit Coin yesterday. You know, we got the cease and desist letter from the state of Texas. We have retained Quinn Emanuel. And guys, when I tell you they're the best, they literally are the best. They are very optimistic that that we are going to get a very, very good outcome, which could be incredible. We saw a lot of buying yesterday in Texit Coin. Right now, Texit Coin is like 29 cents. I mean, that's not great. It's not like, it's $5, but up to 29 cents. I think that really says a lot about what is happening out there. I know there's some stuff, a bunch of stuff out there. Guys, I'll just tell you this. Let the lawyers handle it. It will be okay. But for those of us that were hoping to get into Iskander today or tomorrow, not yet. Iskander will go live overseas. We will wait until we want to be very respectful with the state of Texas and say, hey, right, obviously this is a serious situation. Texas is taking it very seriously, and we believe that the state is wrong, and we're going to prove that. But at the same time, we respect their job, and we're going to err on the side of caution. I think that's probably the right thing to do. But if I get any more information, I will pass that along to you. We did get some jobs data today, jobless claims. Listen, it's hard. I don't know what to say. 206,000 That's nothing, right? That's, if for rate cuts, not a great number. The JOLTS numbers keep declining. So job openings keep disappearing, but at least on the jobless claims, they were, got into the 230s, and then like last week was 229, so it was a little higher, but that's not that bad. Right back down to 206,000. The other economic data points, we did get stuff like Philly Fed survey. It was okay at 16. We did get existing home sales, pending home sales. And this one was ugly. So this is, if you were looking for a cut the rate number, this kind of would be it. U.S. pending home sales after a huge drop in December got worse in January. So December was a bad number. So they were hoping for a bounce back in December. They did not get it, down another 0.8%. Pending home sale index at a record low. Wow, since they've been tracking it. Yeah, pending home sales annualized below 4 million, and that's really down there. We'll be back after the break. 800-951-0592. Quick look here at the markets. The Dow's down 200. The S&P's down 12. The Nasdaq's down 22. The 10-year note 409. So moving back higher. We just really bad auction yesterday. We'll talk about that. So this is, kind of like the bond market's like, yeah, right? I know you got all these great plans, and you're going to cut rates. You're going to raise the inflation target. You're going to create a new Fed Treasury Accord to try to control interest rates. But the bottom line is, if people don't come, you've got a problem. Oil's up $1.35. Again, this is all Iran. 66.50. Brent crude 71. The president saying, hey, Iran, you got 10 days. So we'll see, more war drums beating. I fully expect at some point we will bomb Iran again. I don't know to what extent. I do know that somehow they think they're going to have a plan to keep oil prices stable if they decide to cut Iran off. I don't know. But that's what's out there. Right now, gold up again today, up 30 right now, 5,010, 5,008. It's really been fluctuating, right at, between 5,000, 5,020, 5,025. Silver up again, right now, $78.50. And again, and I've been telling you guys this. Tuesday, so let's just look at this, okay? So the markets were closed here in the U.S. Monday because of President's Day. China, they're off. China, they celebrate their stuff. They take the whole week off. The Lunar New Year. Remember Tuesday, we had a big down day. Told all of you, get in. This is just some paper stuff clearing out the shorts, lowering the price, maximizing the profits, and then getting out, and expect things to come back. Wait, next week when the Chinese return, I'm expecting more of the same, right? We'll see this pullback. Remember, we told you, don't be fazed by the, we saw had a big pullback. I mean, 120 to 70, that was big. It did it in like a day. That was the other crazy part. So much for circuit breakers. But we said stand tall. This is just a paper situation. That continues to be the case. I expect prices to only go up from here. Right now, a $20 gold piece, $52.50. And I'm going to say, I told you yesterday, I'll tell you again today, buy as many as you can get your hands on. Silver. U.S. Silver Eagles. Guys, they're not going to get less. $1,975. Why? Well, it's up $1.50. On top of premiums keep going up. Why? Because there's no silver. Mints can't make enough. They can't even put products for sale. Silver rounds, $1,780. Again, still the cheapest thing we have. Rolls of silver dimes, $300 today. Quarters, $600. That's your cheapest price per ounce. Get it? Well, you can. At 800-951-0592 and put them away. We did get trade deficit news. I don't know. Doesn't the whole tariff thing, well, of course, we kind of knew this. Really wasn't going to be the big win that everybody was hoping for. December trade deficit, $70 billion. That's $17 billion higher than November. Way above the estimate for the full fiscal year for 2000 calendar year 2025. $901 billion was the trade deficit. What was 2024's trade deficit? Well, down by, ready for this, $2.1 billion. That was the difference in the trade deficit from 2024 to 2025. Now, let's not kid ourselves, right? The tariffs made a lot of their stuff cost more, so, yeah, kind of makes sense. By the way, the record trade deficit 2022 was $923 billion. So we missed it by $22 billion. My guess is, this is just my guess, next year's trade deficit will be a new all-time record high. And then yesterday, we had a 20-year auction. By the way, the 20-year auction's a new auction. It's only been around since May of 2020. So one of the things that we did, to increase auction sizes, because we keep having more and more debt, is we rolled out this 20-year auction in 2020. By the way, sometime in the next few weeks, we're going to hear from the Treasury. We got to increase auction sizes again. Yeah, I know. This one, yesterday, it was only $16 billion. It's kind of funny how it was only $16 billion. $16 billion, 20-year paper. The auction topped out at 4.664%. You heard me right. Now, think about a 10-year note. I just told you a 10-year note is at 409. 4.66. we had to pay on this 20-year paper. The tail was 2 basis points. That's enormous. The biggest tail going back to November 2024. Now, remember, I've educated you. All you need to know about these bond auctions, tails are bad, which simply means the price that we were hoping to sell the debt for wasn't achieved. And the longer the tail, that means the more and more interest we had to pay. So if you have a tail, you want it to be real short. Say, well, it's pretty close. Now, this was nowhere in the ballpark, but it got worse. The bid to cover down to 2.3. That's one of the lowest on record, by the way, for this auction. Then inside of that. So what does that mean? It just means not a lot of people were even bidding on it, right? Even putting a bid in. Then it was like the internal. So who put the bids in? Well, it wasn't the foreigners who, by the way, are the biggest buyers of this debt historically. Down, foreign participation down, 20% from last month. By the way, it was the second lowest foreign participation rate ever for this note auction. Now remember, it's only been 6 years, but the only one that was worse was February 2021 during COVID. Other than that, this was the worst ever. The directs were also down. So that directs are the non-banks, right? The like pension funds, maybe even money market funds, stuff like that.
That February 2021, Joe, that date, that's right before the raging inflation came rolling in.
Oh, makes sense, right? Hey, we don't want to buy yields where we know they're going to skyrocket. Thank you, Jason. So there you go. Dealers had to swallow one of the largest amounts ever for this note auction. You know what, Jason? I guess it was only $16 billion. Can you imagine if we start getting this on 10-year notes where the auction sizes are $50 and $60 billion?
Yeah. Well, I mean, it sounds small. When you talk debt versus other numbers, there's different plateaus where the numbers mean something. But when the repo market was failing in 2019, before we got the COVID crisis, because it was all falling apart, the Fed came in, was it 15 or 30 billion a day or whatever they were coming in to pay that thing, right? It was per day or per week.
Yeah. So the reason I bring this up is yesterday we were talking about this accord, right? They're talking about, hey, gotten big plans with Kevin Warsh. We're going to raise the inflation target. See, because it's really hard to cut interest rates when you say you want 2% inflation, but inflation's 3%, 4%, right? That's hard, right? People are like, what the hell? Hey, I got it, guys, no problem. Let's just raise the number. Right? So now we'll just say, hey, anything below 3.5% is okay.
That already being a fraudulent number since they recalculated.
Right.
You always got to remember that number's already fraudulent to begin with.
That's me giving them credibility on their uncredible inflation numbers, right? We know that it's not credible, but again, let's raise it, right? Great. See, now, if I say inflation is 3% and I cut rates, well, it's not 3.5%. We're fine. It's fine. On top of that,
I wish I could go door to door to people's houses and say, "Would you give me 3% of everything you got right now?" It's just inflation. And then just knock. I wonder how many doors I would be successful with that sales pitch. But in America, we sit there and let these guys say this stuff under all the other news that everyone's more worried about, and we're like, "Oh, okay. Well, I mean, this is." We got the right guys in Washington, D.C. Our team is in there, and then if they have to take 3.5%, then I guess that's what we have to do. I have to give 3.5%.
I gotta do it, right? I'm gonna suck it up. Yeah.
They can have my money because I know it's going to be so much better when they do this to us.
By the way, guys, I got more news for you. They'll change that number, just like I told you when they came out with 2%. Hey. Guys, that's just an introductory number. Now, it didn't even last 20 years, this 2% number, right? It's not going to even make it 20 years.
I'll give the Fed a new term. They can call it the double recalculation number. We recalculated 1980, but this is the double recalculation. It'll still be under 3.5%.
Yes, we're going to recalculate the recalculations. Patriot Radio News Hour. We'll be back after the break.
Yes, ma'am, by God.
800-951-0592. By the way, if you think we're going to bomb Iran, which I think it's a certainty, right? We've got more air power in the Gulf today than when we started our bombing of Iraq.
Which time?
Yeah, right. Both times. Okay. Right. Either time we bombed Iraq. So I will tell you this. Trump yesterday said they got 10 days. You definitely, if you need another reason to buy today, that's a good one. If you think that's happening, I do. Why? Because, that's just seems to be the pattern, right?
If it's going to happen, you can't count on 10 days either. It could be 7 days.
Well, remember, they like to do that, don't they? They'll come out, 10 days, and then all of a sudden this weekend they bombed them. And they're like, see, we tricked them. We told them 10 days, but we didn't give them 10 days, right? I'm so smart, right? Again, $20 gold pieces, $5,250. Silver Eagles, 1975. I was told, I thought they were going, we still have 4 rolls of 1996s, just 4. They're 1995 if someone wants to grab those.
I heard that Iran is putting big red X's at all the safe places to bomb so they don't actually blow anything really important up.
Right. Nothing too important.
Just make it a ruse. Make sure everyone knows there's bombing going on so that the economy can be moved in the direction it needs to.
Rolls of silver dimes, $300. That's your deal of the day. 800-951-0592. Now, we were talking about this debt, right? We just had this. And again, what auctions are bad? The long-term ones. 10-year, 20-year, 30-year, they're terrible. And we know they're going to raise the inflation target so they can cut interest rates and, not have to defend this 2% nonsense anymore because it was nonsense. They just made it up. But now they're talking about dusting off the old Federal Reserve Treasury Accord, right, to try to control interest rates. See, they don't want what happened yesterday to happen again because they know this is only going to get worse, right? Because who wants to, listen, people are, okay, listen, I'll give you my money for 3 months. I'll give you my money for a year. Yeah, even 2 years. 5, yeah, okay, 5. 10? I don't know, 10, maybe 10. How about 20? Yeah, no way. 30? Right? Don't want no part of that. This accord will do something where essentially the Fed would set the cap. So, hey, we're going to make sure there are no tails. If we say that we're going to sell this at 5%. Well, by golly, we're going to sell it at 5%. And if we don't have enough bids at 5%, we're going to buy it. And we actually think they're going to do two things. See, that's too much. They'll be buying so much debt, it'll be crazy. We think they're also going to allow for the banks. Remember too big to fail. Oh, well, the banks had too much risky stuff, right? And so they came up with this, you got to have X amount tier 1, X amount tier 2, X amount tier 3. And see, the banks really don't make money on tier 1. They make all their money on tier 2 and tier 3, right? Because the riskier the debt, the more, the greater the reward. We believe that the Fed is also going to get rid of that and say you can buy as many U.S. Treasuries as you like. Now, why would banks want to start buying Treasuries instead of tier 2 and tier 3 assets? Well, just look at Blue Owl today. They're imploding as we speak. These private debt, or like I said, Wall Street here, 49,000. Oh man, it feels pretty good. But we know underneath's been really bad for the last 3 or 4 years. Once the COVID money ran out, the underneath the big shiny AI Mag 7, right, wasn't very good. And the private capital, I think, is going to continue to get even worse. But there's another problem emerging out of Japan. So Japan, the same thing is happening, right? The long end of the curve is exploding higher. Well, got to remember, Japan for decades was selling their bonds for basically nothing. Heck, some of their bonds were even negative. So remember, when yields go up on bonds, you lose money. Right now, something very bad happened while nobody was looking in Japan. The losses of these bonds in Japan, listen, Japan sells really long-dated bonds. They've got 50-year bonds, 60-year bonds, right? They get, anything they can to sell it. The unrealized losses for Japan's, what we would call the mid-sized tier banks, like Silicon Valley, right? Remember Silicon Valley when it imploded? It was like, the 28th or 29th largest bank, yet no one had ever heard of it. Regional banks, look at your regional banks here in the United States. Unrealized losses over the last 30 days have went from just under 50% to now sitting at these bonds are now only worth 38 cents on the dollar. So 62% unrealized losses. Now, Japan has a rule. And by the way, this is going to affect who buys debt this long. Regional banks, life insurance companies. It's another one, we need to watch out for. Life insurance companies. Japan has a rule that if your unrealized losses go over 50%, you got to tell everybody. You got to start writing it off. Well, guess what? Japan may be changing the rule. 800-951-0592, Patriot Radio News Hour. Let me make this simple for what's happening in Japan. So these bonds that they've bought are only worth 38 cents. And the problem is, once you break the 50%, you're supposed to get rid of them, because that's bad. Okay, you can't, get that off your books and buy something better. Well, of course, that just means they're insolvent. All of them. Think about this. Japan's entire bank, because all these regional banks go under, the big ones go with it, right? Because it's too many. But their banks and their insurance industry, they're essentially insolvent. So what are they doing? Well, they came up with a great plan. Ready? Hey, forget about mark-to-market. That's over. You're just going to label these as, you're just going to hold them until maturity. So essentially the insurance companies, they can't even raise any money to sell this. The banks can't sell them now. Of course, no one really wants them anyway. And on top of that, they said, hey, by the way, just keep buying it. Yeah, keep buying more. So the same solution that we keep talking about. What's the solution to our debt problem? I know. Let's give them even more debt. And guys, guess what? That will work for a very brief period of time. This is why do you think every boom and bust cycle, why is it every time the bust is always worse? Right? The first bust, go back to the 80s bust. That wasn't great, but, it was doable. Of course, then you had the dot-com bust, right? That was worse. But, that was kind of doable. Then you had the financial crisis. Now, that was bad, right? The financial crisis was really bad. This next one, the financial crisis will look like good times. This is absolute ridiculousness. I can't even tell you. This just basically says, let's take everything we know about debt and accounting, throw it out the window, and let's just keep going. Because, gosh, if we tell the truth, everybody will know this is a house of cards. And, Jason, it's crazy that people actually think this is a good idea.
Yeah, and you got people like Pam Bondi, being grilled in front of Congress, and the stock market is at all-time highs, and everybody should be super thrilled about their 401ks. And I've made this analogy before. With inflation, it's very tricky, okay? You have a house that's worth $500,000. In 1 year, it goes and it's worth $505,000. And most people are like, well, a lot of people's houses might have been going down, and ours went up. That's pretty good. 1%. 1% on a house that you have to pay all the repairs and stuff for. The same thing goes with the stock market. If the stock market goes up over the course of a year, 10%, but everything that you buy goes up that much or more, let's just say everything else goes up 10%. The loaf of bread goes up 10%. Your stock market goes up 10%. That's great. But at least when you eat the loaf of bread, you're only taxed when you first buy it. Whereas you get fees, penalties, and taxes on the back end of your 401k. So it's worse than that. So 10% doesn't cut it. And this 3.5% that they've agreed to, this is a great place to be, 2.5% to 3.5%, which is actually doubled, which puts you at 5 to 7%, which is actually a little more than that, because we've been doing 5% ever since their little mandate. We've been, to change it in 1980, it's been about 5%. The money creation has been 5%. What the Fed has just said is that they are going to double the money. This 2.5% to 3.5%. They're doubling the yearly money creation. That means we're going to have 10% inflation. That'll be the average after some emergency blows up and they try to get your attention on some other story. So yeah, they're going to brag about stock market. Maybe your house price goes up. Oh, this is all great. Well, if everything else costs just as much or more, you're not doing all that great. Gold and silver has been doing a way better job than 10% the last couple of years. That's why we put you in that for your savings.
it's getting worse, you guys. They're going to print a lot of money. We already know that. But this debt, it doesn't matter. U.S. debt, nobody wants it. 20 years? No. $16 billion. That's $16 billion literally is nothing. And nobody wants it. Nobody. Japan, we're just sitting on 68% losses, right? Their balance sheets are disasters. And when this thing comes, and it will come, it is going to be a wipeout that, because we had a chance at the financial crisis, didn't we, Jason? We had a chance to fix it. We did. It was going to be bad. It was going to be ugly. And instead, what did they do? We can't. We're afraid. We're afraid.
And I'll say this, Joe. They do want it. They want it so that they can sell it and get something for it. If the 2008 housing crash, they gave $29 trillion of this stuff out, and Japan took it, and Germany took it, and the big banks took it. Well, they're going to give it away. Of course, they want to get it, sell it, and pay their bills as well. But that's what they have to do. So that's why $16 billion can't sell, Joe, because they have to give it away to keep their system in place. Well, if you give it to us for free.
Yeah, right, yeah. Gold and silver are on sale. Run to lock it up. 800-951-0592. Guys, this is your chance. Things are going to get real exciting very soon, probably starting next week. Gold's back above 5,000 here, $20 gold, 5,250. Tell you what, you want to buy 25 or more, we'll take them down to $5,200. 25 or more, $5,200. I know, but that's the best we can do. I think that's 130,000, by the way, 130 grand. If you guys want to do something big, you want to do $500,000, $1 million, call me. We can get it done for you. Don't wait. Silver Eagles, 1975. And I'll make you a deal on this one. This one is a little more palatable. Buy 10 rolls or more of U.S. Silver Eagles, and we'll take them down to 1955. 1955. Arlene, give me a thumbs up if you heard that, Arlene. Buy 10 or more rolls of Silver Eagles. We'll take them down to $1,955 a roll, but still, if you're looking at best price per ounce, rolls of silver dimes at $300, rolls of silver quarters at $600. Those are your two best buys right now at 800-951-0592. So, had some really bad economic data on the housing front. Man, bad is terrible. Just, it's expensive. I get it. And they're struggling to get rates to get them lower. And then Walmart today just said, hey, they anticipate things getting a little more difficult for their shoppers. Wall Street was looking for expectations close to $3 a share. Walmart said, next year probably going to be about $2.75. That's a big difference. And again, just saying, they, by the way, expect price increases in the next several months, on the call from Walmart this morning, saying that the consumer's struggling more. We're the winner of the consumer struggle, but prices are going to have to go up. Right now, the Dow now down 300 points. But again, all this headline stuff, we're missing the main thing here. Debt. Everybody is struggling to sell their debt. China struggling to sell their debt. I'll get it. I know it's Japan. God, nobody wants it. Their losses are incredible. And every time, listen, these yields keep going higher. That means the losses get worse. Europe. By the way, the head of the ECB, Christine Lagarde, stepping down. Uh-oh. Wait, Jay Powell, he's out. Lagarde is out.
They want to get out. They don't want to be the guys that are spearheaded the inflationary cycle we're getting into.
Don't want to be the one left holding the bag here. 800-951-0592. God bless everybody. Here's the thing. It's Thursday. That means tomorrow's Friday. So get your gold and silver locked up today.